Good evening. Good evening. It is me, Nicole Simpson, also known as your Urban Cash Coach and the president and owner of Go Fund Your Life. I wanted to come in here tonight because we are spending a lot of time here at Go Fund Your Life headquarters getting prepared for Life Insurance Awareness Month. So it's going to be coming up in September, and we're really excited about it because we learned that many consumers are not up to date on how life insurance works, what kinds of contracts they currently have at home, and how to make sure that this life insurance does for them what they want it to do. So, on tonight, I just want to talk to you about term conversions. So, many people may have term life insurance policies because it was super cheap, it was easy to get, and when you got it, you just knew you needed to have some insurance coverage. So, the big secret in the industry about term insurance is that about 90% of term insurance buyers actually outlive term insurance. And the reason for that is because it's a short-term policy. It's a short-term solution designed to be able to cover your income for a time that you may need it most. So many people buy term insurance when they are purchasing a home, when they have young children in the household that they need to be able to raise, and they know that most of that money and that income is going to do something to help raise those children over time. Most of us only have young children in the house and a mortgage for somewhere between 20 and 30 years. So after that time is done and we don't necessarily need to hold on to that coverage because we don't have dependents, the insurance typically is just going to be over and done with. Most people are not going to take that policy on any further, but sometimes you might need to. So I want to share with you here what it actually looks like to have a term insurance policy and where it goes. So this is an example of a 53-year-old female non-smoker. So she got a term insurance policy, and this is the annual premium that you see here on your screen. So the annual premium shows $1,033 a year. So she's paying a little bit over, little over $100 a month. So this is fine. You see that that's what the annual premium is every single year. Down to year 10, we see it come down to year 20. When we get to year 21, she's going to be 73 years old. So at age 73, that coverage that she's been spending a very small amount on is now going to be going up to $10,000 a year. No one's going to be able to afford that. When you take a look at that raises her premium to $833 a month. And now she's 73. So if you know what happens at age 73, that's usually when we're well into our retirement years and we're now on a fixed income. So what most people cannot afford to have happen is their insurance just pop up from an affordable rate all the way up to $800 a year. So if someone attempted to buy a 20-year term 20 years ago, they would be holding on to that thing all the way until we get to age 73 and then having a rude awakening. So reason why I'm here today is because I know that some of my viewers, some of my followers, maybe their parents, even brothers, sisters, some of their loved ones are probably coming into the rude awakening. And there's some things that you may be able to do to prevent that from happening, because we don't want to have people lose their insurance. We don't want to have people end up passing away and not being able to have their legacy left behind, not being able to leave money for their charities, not being able to leave money for their children and grandchildren. So what can you do? How can you avoid this great big huge bill at the end of the rainbow? Well, it's really important that we consider something that's called a term conversion. So in our illustration here, maybe by the time we get to age maybe 65 or, somewhere in there, maybe there's more income in our household now, and we don't have as much debt that we needed to pay off. Maybe the mortgage is paid off, the kids are out of the house, everybody's stable. So maybe instead of carrying that full $250,000 worth of coverage, we go in and look and see how much of that we can actually calculate to buy something that's called permanent insurance. So when you go in and buy permanent life insurance, you're actually going to be locking that in for life. So whatever premium you lock in, that's going to be the premium that you can live with on your fixed income. It's not going to change. So many of you right now are getting really close to the end of that 10-year, that 20-year, or that 30-year policy that you bought, and it's about to jump sky high. So what can you do? You really want to get in contact with your insurance agent or your insurance carrier and ask them, do I have a conversion privilege? The conversion privilege is going to allow you to convert a portion of your term insurance policy into a permanent insurance policy without having to show evidence of insurability. So if you bought a life insurance policy 10, 20, or 30 years ago, there may be some factors in your life that have changed. Maybe you now have a diagnosis that requires you to take some prescriptions. Maybe you've gained a little weight. Maybe you've had a cancer scare. Maybe there's been something in your finances that ordinarily would not allow you to be able to get a life insurance policy. Well, when you have a term conversion, all of those things are out the window. They don't look at that again. You've already been underwritten in a term conversion scenario. All they're going to do is tell you how much it will cost to be able to buy that permanent coverage and move it from the term column over to the permanent column. Okay. So you don't have to worry about losing any insurance, especially if you need some for final expense. What I'm seeing happen is mom and dad, grandma and grandpa are buying that term insurance. They're carrying it all the way until they turn 73 years old, like this scenario. And then they find out very quickly that they can't afford it, and then it's gone. They lose all of their insurance. And now the family needs to take care of final expenses, and they wind up having to do a GoFundMe, a fish fry, or a car wash. So I don't want that to happen to you. I want you to get your policies out between now and September. We are offering free complimentary reviews here at GoFund Your Life. I've got about 6 agents who are all hands in, and they're ready to review policies if your agent is not available to do so we can dig into this. All policies do not have a term conversion. So if it doesn't, you need to know what your next steps are going to be. What happens to that policy once you reach the end of that contract period? I'm going to show you one other thing, and then I'm going to get out of here. If you've worked with me before, you've probably seen this chart. This is the 4 steps of life insurance coverage. In this particular teaching, we usually talk about legacy in step 4 and final expenses in step 1. Those are the 2 areas that we normally want to lock in with some type of permanent life insurance. So now it's time for you to go back and look at your insurance financial plan and make a determination. What's going on with my insurance? Do I have enough? And now that it's time for me to start breaking this off and moving it over into permanent, how much do I need for that final expense bucket? What does it cost to cover a funeral or a homegoing? Is it $5,000, $10,000? Probably somewhere in that area, right? Somewhere between usually $10,000 to $12,000 is what I'm hearing most folks say. So maybe you want to lock in that much in permanent, so at least you know you've got that in the bank and it can never go anywhere. Your family's good there. Then maybe you want to go back and look at that number 4 bucket and say, hey, I need enough to leave a legacy. How much is a legacy? However much you say it is. So if you know for sure, without a shadow of a doubt, you want to leave each one of your children $5, $10, $20, or $1,000, that needs to be locked in your permanent life insurance on that step 4. And you can convert that amount of money from your term insurance over to your permanent. So if you have a term insurance policy, just know that it was never designed for it to last forever and ever and always. In fact, it was designed to help you have peace of mind, the same way your car insurance does, the same way your homeowner's insurance does. You don't expect it to burn down. You don't expect to get into a total accident, but you do keep that coverage just to make sure you've got the peace of mind. So that's where term fits in your financial plan. But at some point, we are probably going to need to get some buckets of permanent over time. And a great way to do that is with term conversion. And if you're coming up on year 10, year 20, or year 30 in your plan, it's time to talk about it. Okay. So I promised me that I was only going to talk to you for 10 minutes, and I've been in for 10. So Thank you so much if you tuned in and watched. Please share this with someone who you know, who you love, who probably needs to have a serious life insurance conversation, and have them reach out to me. I would love to be able to help. I'd love to be able to offer you a free policy review. And let's start talking about term conversions and how we can build those into our plan to make sure we never go without having any insurance. Okay? Thanks so much for watching. I'm Nicole Simpson with Go Fund Your Life. I'm looking forward to talking to you soon.